Sarah Borgson-Keeter with NAREITWeek.com, and I'm here in New York City for REITweek 2016, NAREIT's Investor Forum. I'm joined today by Ernest Rady, Chairman, President, and CEO of American Assets Trust. Welcome, Ernest.
Thank you, Sarah. I'm delighted to be here.
So how would you describe fundamentals along the West Coast?
They're actually excellent. Our strategy is coastal West Coast, where it's very difficult to get entitlements, and people want to live. As many people that can get a job on the coastal West Coast will move there because of the climate. And it's so difficult to build a product that would compete with ours. So the economy is buoyant, things are really very good. The strategy we have is the strategy we should have. Coastal West Coast, difficult to get entitlement. We're building a project now that took us 17 years to get entitlement, and so and yet the population continues to grow.
And does development continue to be more attractive than acquisitions, and how do you minimize development risk?
Development at the moment is more attractive than acquisitions. Acquisitions have taken on a cost which would be difficult to explain to our stockholders. Development is something that I've been doing for 50 years, and so we know how to minimize our risk, but there's always risk to development. The main risk to development is, are you building something that will have an appeal to the marketplace? And we've done that so many times successfully. And then of course there's construction risk, and we know how to minimize that. And but we've just completed a project in Portland which we think will be worth 50% more than it cost us to build. So we are definitely enthusiastic about development on a very limited basis where the opportunity presents itself. But in development, costs have gone up dramatically also. So the project we built in Portland cost us $200 million. And if we were to place it today, our construction manager tells us it would be another 35%. That's another $70 million. So development itself is cyclical, and you have to build when the time is right and the product is right, and of course location, location, location.
And what potential is there to boost rents across the portfolio?
Well, we have a diversified portfolio. We don't have one type of portfolio. And of course, in the case of apartments, which is one product type we have, rents get adjusted annually. In the case of office, the tenants roll over, and then we have to deal with a competitive marketplace. In the case of shopping centers, we're 98+% occupied. So when a tenant lease does come up, we may be able to increase the rents, but it doesn't come up every year because they usually have short, mid-term to long-term leases. But the economy itself is available to increase rents, and inflation in real estate is a great ally to have on your side. So we love real estate. We love our real estate, and we love our real estate particularly over the long run.
Well, thanks so much, Ernest, for coming in.
Thank you.
And for more news and information about REITweek 2016, be sure to visit REIT.com.